welcome back to my YouTube channel. I believe we understood the previous example I gave, so this is a continuation of the single entry and incomplete records. I said that in my previous video I was like, the second example would make the video too long, so which is why I had to extend it to another video. So let's solve this one. I'm still going to attach it here, the questions like I said, and I'm going to be solving it with you guys. Femi, a sole trader, did not keep proper books of accounts, but from the following details you are required to ascertain the profit or loss for the year ended December 31st December 1991, and also to prepare a statement of affairs as at that date. In my previous video I said that statement of affairs is just like balance sheet, but since it's a single entry record keeping, it's called statement of affairs. So it's still the same format. Okay? Just that we're trying to ascertain our opening capital or our closing capital. And it's the question says you are required to ascertain the profit or loss. Remember, it's from getting the opening capital and closing capital that we'll be able to get our profit or loss. So this balances, which is also pasted here, stock 31st, so you're seeing something like 31st stroke 12 stroke 90, and then on the right side you're seeing 31 12 91. Don't get scared, it's just like this 31st December 90 is the same as 1st January 1991. So it's the opening statement of affairs, while the one on the right hand side is the closing statement of affairs. So moving on to additional information, it's just showing you the opening and closing balances. You know I said we need the opening and closing balances to get your opening and closing capital. So the drawings during the year amounted to 260 naira. Depreciate fixtures and fittings by 10%. Write 30 naira off motor van. As regards the debtors, it is ascertained that 50 naira is irrecoverable and a further provision of 5% should be made. Also provide 70 naira in respect of bills receivable estimated to be irrecoverable, that's bad debt. What is that? Bad debt. While the provision is provision for bad debt. Alright, so let's prepare our statement of affairs. We need to get our opening capital. We're now going to focus on the one on the left side. Okay, so what's the name of the enterprise? Femi. We just wrote Femi in sole trader, so let's just write Femi. Maybe Femi Limited. Statement of affairs. As at 31st of December 1990. CR. Remember, you guys, please, I'm going to be using the T-table format because that's even what is being used in this textbook, and it's more easier to comprehend as far as I'm concerned. So let's look at our opening balances, because it's the opening balances that we're interested in now. Did they give us fixed assets? Yeah. Fixed assets, we have fixtures and fittings. Let's write the heading. Fixed assets. Oh, we forgot our Naira sign. So fixed assets, we have fixtures and fittings. You guys can see, right? The one on the left side, that's the 31 stroke 12 stroke 90. Fixtures and fittings. That's what 150. Yeah. Which other fixed assets? We have motor van. You might be asking why are we not using the additional information? The additional information occurred during the year, so it's going to take effect in our closing statement of affairs. All those provision for bad debts and irrecoverable debts is in the closing statement of affairs that we're going to make use of that. So So that's motor van. Motor van is 190. So what's our total for fixed assets? That's 9 plus 5, 14, 340. Now, for our current assets, remember we're looking for what's our opening capital. That's what we're trying to like find. So, current assets. We all know what falls under current asset. Our stock is 1,670. What else? Creditors is a liability. Debtors 1,120. Cash in hand is a current asset, 25. We can all see cash in hand, 25. Bill receivable, 1,505. All these are in the questions. That's what 1,505. So the total is what? The total for this, I didn't do this thing well. I meant to put this thing here then. Let me do that. So that it won't be confusing. So it won't be confusing. 1,670, 1,120, 25, and 1,505. So the total of the current asset is 4,320. Do you get? So now it will be easier for me to like add these two. This is the reason why we normally like separate this. It's usually 2 naira signs. So you do your workings here, then you get your. This is for a total figure that doesn't even need adjustment. I meant to even put this to here too, but let's just leave it. Now 4,320 plus 340 will give us what? 4,660. So moving on to the current liabilities. Current liabilities and current assets are meant to be on the same line, as I've been taught to do. So let's follow accounting principles so that accounting people will come after us. Now, current liabilities, bank overdrafts. We can see it in question here. Bank overdraft is 2020. You know what bank overdraft is? When the bank allows you to like withdraw more than you have in your account, then you know you have to pay back with some interest and also. Bank overdraft 2020. Let me not make that same mistake. 2 naira sign. 2020. Creditors. We are still on the opening balances, you guys. We are still on the opening balances, still on opening statement of affairs. So we are still on opening balances. So creditors, where is it? Creditors is 1,540. Total is 3,560. So now the difference between these two will give us our what? Our opening capital. So 4,660 minus 3,000. Let me put the two figures here. 4,660. Balance it. So this minus this is what? 1,100. So now we've gotten our opening capital. This is what we did. We've done something like this in previous videos. So I don't like the way this thing is. Let me stay like this. So yeah. Opening capital 1,100. Fixed assets, current assets, balanced it. So the next thing we were told to do, we said we should get our profit or loss. We've not even answered the question. We just like answered something that will help us get the answer to the question. We use our opening capital and our closing capital together with drawings and net profit. Together with drawings, rather, net profit is what we're trying to find, so it's not net profit. Together with drawings to get our profit or loss. So what else? So the next thing now is to get our closing capital. So this is where we're going to like be doing those adjustments and all. I don't know how this board is going to fit, but God will help us. So let me rub off the board. Let me remove the board. Let me now clean this. Let me keep this opening capital. See you guys, this is where it is. So if I ask you guys will tell me where the opening capital is. This is where I'm hiding it. Opening capital is equals to 1,100. I just want to keep it here so that we know. Now let me clean it. Current liabilities, let me now clean this. Remember, this is just the format, like it's basically balance sheet formula, format rather. So this will be changed to 1991. My Nelson handwriting, it really becoming here. I'm making this figure. Also, I'm trying my best to like separate my words so that it won't be like confusing. So now, statement of affairs as at 31st of December 1991. Now our focus now will be where on the right hand side, those balances, that is 31, 12, 91. Before we're looking at 31, 12, 90. Now we're on 31, 12, 91. So our fixed assets, still the same fixtures and fittings. Apparently the fixtures and fittings, they have the same figure, but remember we are going to take note of our adjustments. So fixtures and fittings, let's go to the additional information. It says, where is it? Depreciate fixtures and fittings by 10%. By 10%. That will be 10% of 150. Our figure of fixture and fittings is 150. So 10% of 150 is what? 15. Remember, I don't know where that's the thing. I don't know where I'll solve this stuff. I don't know where I'll solve this thing. Maybe I'll just be solving it since it's recorded. In case you want to like go back to it, you can like rewind. You get, so I'm going to solve it here, then I'll still clean it back so that we'll have like space to solve the rest. So we said our fixed asset is 150. So 10% of 150 is 15. So we'll have to do, now I've gotten 15, you have to still minus it. You get, you subtract 15 from 150. 150 minus 15, that will give us 135. 135. So it's not the 15 you put, oh, you won't put the 15. 15 is what you use to depreciate the 150. So it's 135, which will be your figure now for, what is wrong with this marker? For furniture and fittings. Remember before we didn't make any adjustments. Why? Because it was an opening balance and then nothing had taken place during that period. So 135, there is no anything again. So let me rub off this. Like I said, I'll be rubbing them off because of space. Let me drop this. dust are here, so I don't have to like go around to getting it and all. So another fixed asset is, why am I always leaving this page? Next is motor van. Even though you don't see, because sometimes you might forget that it needs an adjustment. Anytime you like go to a, you like look at the figure, you just go through the additional information, scan it through. Is there any additional information that I'm missing out on? Yes. Because sometimes you might skip it, you won't actually know that there's an additional information. So motor van, write 30 naira off your motor van. This is just is taking the place of that 15, which was the minusing figure. So what you just do is you just minus 30 from 190. They said write it off motor van. So you're subtracting 30 naira from your motor van, and your motor van figure is 190. So 190 minus 30, which you are writing off, give us 160. So we don't actually need to solve that one. We've gotten our motor van as 160. Remember, it was 30 naira. They told us to write 30 naira off motor van, and our motor van figure on the 31/12/91 side is 190. So 190 minus 30 will give us what? 160. So that's how we got 160 here. Now, maybe I should just write it here in brackets, 10%. No, there's no need, because it won't be enough. There won't be space. There won't be space. I've already solved it, so if maybe you're wearing clear, you can like rewind and like go back and they get it. So that's 150 minus 15 gave us 135. So now moving on to the next one. We've gotten our two fixed assets. The next now is current asset. Let's look at our current assets. Our stock, where is it? Our stock on this side, remember we're looking at the closing balances. 31/12/91 is 1,850. So you write it, stock 1,850. This is very easy for us because this time around it's not like the previous one that you're looking at the figures from the table. This one they've given you your opening balance and your closing balance, but they won't state it. You just need to know. Now, your debtors, I'm sure this thing will have additional information. Debtors 1,050 was given. Then you go to your additional information rather. As regards the debtors, it is ascertained that 15 naira is irrecoverable. That's the bad debt, which you already subtract from 1,050 to give us 1,000. And a further provision of 5% should be made. Let me solve it. Where is it? Debtors. Let me solve it here. Our debtors figure normally is 1,050, right? We're told to write 15 naira off. 15 naira is irrecoverable rather, and irrecoverable debts are debts that you can't get it. They are bad debts. For example, someone that died, someone was owing you money, the person died, the person is now your bad debtor. So 1,050 minus 50. Let me write it here, bad debts. You're subtracting it, which give you 1,000. Then they said again, they said that a further provision of 5% should be made on it. So now the 5% now will be on this 1,000. 5% provision should be made on it. Where is it? Yes, 5% of 1,000. Where is it? 5% of 1,000. And 5% of 1,000 is 50, right? 5 over 100 times 1,000. That's 5 times 10, that's 50. So 50. That's the provision that should be made. You less provision for bad debts. Remember, in our profit and loss account, you always less your provision for bad debts. Sorry, in the balance sheet, you less provision for bad debts. So that's 950. So now this is what will be our new debtors figure. You know, normally your balance sheet, you write debtors, you have a normal figure, in less provision for. So we're basically doing the solution here already. Because of that irrecoverable of 50, we just like separated our workings here. I hope you can all see it. Debtors, bad debts 50, you less 1050 from 1050, you get 1000. Then we're told to further provide a 5% provision of the 1000 of your debtors. So that will be, and you know that the debtors, once you remove 15 naira from bad debts, the remaining debtors you have is 1000. So you now make a provision of this 1000, which is 50. You less it. So this is your debtors now. This is your debtors figure, 950. You write it. This mark, I feel like it's because I'm doing it this way. That's why. Please, let me just finish. Debtors 950. I hope we are all following. Please remember to note any question in the comment section. You guys should make use of the comment section. I'll be going through the comment section here. Because I don't even have much comments, but so it's like very easy for me. I hope I get more engagement. I just hope this reaches the right audience though. That was 950. Now what's the next thing? Bills receivable. Bills receivable on the other side is 1420. Now, do we have any additional information on bills receivable? They said provide 70 naira in respect of bills receivable, which is estimated to be irrecoverable. And we all know what irrecoverable debts are. Bad debt which cannot be paid back, like it's gone, you can't get it back, it's gone. The 70 naira is gone. So you minus 70 naira from 1420. When you do that, you get 1350. So bills receivable. Bills receivable is what? 1350. Now cash, remember, cash in hand on the right side is 120. There's no additional information for that. So I made the same mistake again, you guys. 120, but shall adding everything together. Once you add 135, all these together, you get 4,565. If you are confused on how I got it, remember how we did the opening statement of affairs. Like I put it on this side before adding. I added here before adding, so that we'll be able to just easily add. But since it's like this, we can just add everything together. Now moving to our current liabilities. Where is it? Our current liabilities, creditors. What's the figure for creditors on the right hand side? 1,400, and there's no additional information. So let me know that mistake again. Then what else? Okay, I'm writing creditors. What else? Bank overdrafts. Bank overdrafts. Remember, bank overdraft is a current liability. You are owing the bank. You borrowed from the bank. Bank overdrafts. 1,940. When you add them together, you get 3,340. 3,340. Now put the other balancing figure, that's the same thing here, 4565. Yeah. Then 4,565 minus 3,340. 4565 minus 3,340. 5, 2, 2, 1. That is 1225. 1225 now is our closing capital. Oh my god, you guys can see all this stress was just to get what our closing capital. Honestly, the opening capital is still even easier to get because you don't have any adjustments, you just put it there. But for your closing capital you have adjustments. I couldn't like separate the, anyway, I just had to solve the workings because of space. I can't like separate more. If I started solving everything one, then I'll have to erase it again before putting it. But since it's a video, you can rewind to those workings if at all you didn't get some of the workings, and also you can ask questions in the comment section. So these are closing capital now. The first one we got, you guys, where is the opening capital? Tell me where our opening capital is. Where? Oh, behind me. Where behind me? Where? I can't see it. I can't see it. I told you guys to remind me. Where? Oh, my right. Oh, I can see it now. Okay. Yeah. So this is it. Our opening capital, 1,100, and this is our closing capital, 1,225. So going back to our question, what were we told to prepare? We were told to ascertain the profits or loss for the year 31st December 1991. So now we have our opening capital and our closing capital. Let's go to statement of profit. I told us to be huge. Let's clean it. It's still Femi Limited, so you don't need to clean that Femi Limited. So Femi Limited, in exam like this, they say all this stuff has marks, so that's why these topics, the headings is also essential. Statement of profits. For the year ended 31st December. December 1991. So you all know our formula. Remember that first video? Was it the first video, the previous video, or this video? I don't even know. Where I said get our, since we knew how to get our new capital, which is our closing capital. Closing capital is same thing as new capital, you get. So since we knew how to get our new capital, we made profit the subject of the formula, and that's how we did. Okay, let me repeat it. Oh no. If you've not watched my previous video, go and watch it, then you see the formula for the profit, how to get your profit. So we've gone to the video, let's proceed. Statement of profit for the year ended 1st of December. We have our closing capital, which we just got now. Closing capital. Remember our 2 naira signs. Closing capital, which we just got, was 1,225. You add your drawings. In our question, where's our drawings? Where is our drawings? The drawings during the year amounted to 260. So you add your drawings. You add drawings. Drawings of 260. You get 1,485. Now you less opening capital. Where's our opening capital, you guys? Is it still there? Okay, it's still here. 1,100. Put it in brackets. to show that we are deducting it. You get what? 385. This is what we've been trying to get since. So this is our profit. Statement of profit. It's a profit, guys. Here's our profits. Our net profit rather. Anyways, 385. So this is it. We've come to the end of this video as well. I hope this was well understood. We got our closing capital already, 1,225. So this thing is just trying to, like, in all, what we just understand from this is that to get your profits, you need your opening capital and your closing capital. And to get your opening capital and your closing capital, you need your opening balances and your closing balances. And how to do that is through which instruments, or two rather, your statement of affairs, your opening statement of affairs and your closing statement of affairs. Because your opening statement of affairs, that will give you your opening capital. That is after dividing. Remember when we said that the balancing figure is what was that capital? Like the total of the credit side less the current liabilities gave us our capital. So then we proceeded to do our statement of profits, which is closing capital, add drawings, less opening capital to get our profits. So far so good. I guess this is, yeah. If I'm still going to go, like, if there are still more questions or more subtopics under this single entry, I'm going to treat it in the next video. So I hope you guys enjoyed this video, and I hope I was, how will I put it? I hope I explained very well. Thank you so much for watching. I really do appreciate you guys that stayed to the end of this video. Please help me share, comment, repost, like, and lastly, subscribe. Bye.